Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, March the 22nd. Just wanted to say thanks to everybody that came by this weekend to attend Don Vialu's presentation, his educational session here at the Market Trading Concepts office. We had a great turnout, and it was a fantastic learning session, and enthusiastic group, and fantastic. It was just fantastic all around. I was really happy, and a lot of the attendees were very happy with the content that they learned. It was very helpful, and of course, thanks to Don for putting the time and effort into the presentation. It was really truly one a first in terms of Don presenting his work in that way. He's done a lot of presentations in the past, but this is the first time that anybody's had the opportunity to actually sit with him in a workshop or course kind of style environment. So thanks again to Don. Hope to do it again. Let's just dive into these markets. So this is the Dow future continuous contract. Let's look at the current contract. It'll be the same chart on the daily chart, but it will actually be a clean chart. So I'm going to try and keep this video very brief this weekend. Not really a lot to talk about. I mean, we've just been going higher and higher and higher. It looked like last week, towards the middle of the week, we were going to let go and maybe have a decent pullback. But as you can see, all we really did was establish a range, a very shallow pullback, and then we closed right near the highs of this sort of that sort of sideways consolidation there. So we closed somewhere around 14,459, and I believe the high is maybe 20 points in the Dow higher. So we had a really strong day. If you look at the I'll just flip over to the 60-minute chart. Here's a 60-minute chart, and you can see it was kind of sloppy and choppy, and then we closed right in and around these highs at the end of the day. So there's still a lot of strength in these markets, and until proven otherwise, we really can't be looking at the short side. But in my opinion, we're not really looking at the long side either, for the simple fact that we're really extended. Like here's the breakout extension of the fibs above this cup pattern. We're above the 618, and we're on an accelerated sort of trajectory here above 45 degree. Here's a sustainable 45 degree trend line. We're kind of on an accelerated trend line. So there's not a lot to do here. We could very well break out of these highs going into next week, or we could pull back to support. There's really not a heck of a lot to do here. The only thing I do notice is that, the stochastics are to the high side, and, the MACD is looking a little bit divergent again. It almost looks like a double top in the MACD. Looks like we want to cross to the low side as the price is going higher. So there's a bit of divergence going on there. But, there's not really a heck of a lot to talk about in the market or to do. So let's just move on to the S&P futures. Is very much the same story. It's not as close to the high as the Dow is, but it's close enough. The NASDAQ, same situation. We're just kind of sideways but pushing higher. The NASDAQ seems to have a nice little kind of minor triangle forming here. Could look for some sort of direction, or breakout outside of that sort of chart pattern there. Let's take a look at the transports. So the transports are strong, and they just they pulled back to support at the dynamic support at the 21 period exponential moving average, and you've sort of got this this minor pattern going here. You've got definitely an established sort of uptrend, and it just looks like this market wants to go higher, but it's at support, and you just need to really see what it's going to do there. So let's take a look at what's been driving a lot of these markets, and let's see what the dollar index is doing. So the dollar index is, I was looking for a move up to retest some of these highs, And the dollar index, the key level in the dollar index, as we've been talking about, is around 82.50. So if you look at, we've been trending higher in and around this area. You've got the 618 at 82.35. You've got 82.50 as a key support level. So last week, we were talking about this pullback at the close of last Friday into the dynamic 21 period exponential moving average. In this case, it's, dynamic support because we're trending higher. So if you look at this, we sort of put in a lower high here. We didn't break through this higher high. We put in a lower high, and then we're right back down to 82. We closed at 82.52.9. So this is a little bit. This is really a tough area to be looking at. I think what you would need to see is you need to see it break above this pattern here in order to get back bullish on the dollar index. Right now, you've had a test and then you've come right back down and tested again this key level of 82.50, 82.35, 82.50, that zone, without putting in a higher high. So that's a little bit of a red flag. So I'm just going to keep an eye on this and see if we fail this trend line and we break through, then that might be it for dollar strength. If we break through the top of this trend line, then we could be looking for a potential test of these levels. So those are sort of the decision points that I'm looking at. Until it breaks out of this pattern here, there's really not a heck of a lot to do. Normally you want to see larger spacing between these tests. This is an intermediate sign of weakness where you have this high, a test, you fail to make a higher high, and you're already back down testing. So we'll just need to keep an eye on that, but there's nothing really more to say about it at this point in time. The MACD's rolling over, stochastics, the fast stochastics buried to the low side. So we could look for a potential bounce here, but we're starting to look a little bit weak here. So we'll just need to see really where it resolves itself outside of that pattern. Let's take a look at the euro and see what it's doing around that key $1.30 level. And if we look at the euro, so this is interesting. We've been trying to break down, and look at where we close. Two ticks, and this is the first time I've looked at this since for a couple of days. But if you look at that, you see that we closed right at 129.98. We are minus 2 ticks below that key $1.30 level. So tell me that's not a really important key level in the dollar index, or in the euro rather. So as the euro is testing 82.50, which is the key level, the dollar index is testing its key level of $1.30 as resistance. So what you really want to see here is, you want to see how the euro, if the euro is going to roll back to the low side or if it's going to break through here, and you want to see the dollar, the same thing, how it will resolve itself. So the euro's kind of in line with what the dollar's saying, but you're really at those inflection points, or at those key line in the sand levels, and there's really not a lot to do until it resolves itself either way. So let's just jump forward to a couple of other markets. Let's look at the gold. So the gold to me looks like it put in a complex bottom, and it put in a basing pattern. And now if it gets above, some of these levels in and around here, this swing point, it does have challenge points to the high side, but it could potentially test, well, let me just throw some levels up here. To me, it's looking more bullish than bearish at this point in time, but to me, it looks like an early stage reversal. So it could still pull back and push higher. As long as it doesn't violate this low at 1554, I think we're, I think an intermediate bottom is put in. It could come up and test 1630 potentially, or this level in here at, 1660-ish. So at this point in time, that's sort of what I'm looking at. And that being said, the moving averages look like they want to, cross over bullish, but that can happen and then it can roll over. So it looks like we want to put in an 8-period moving average cross above the 21-period moving average. The MACD's already rolled to the high side. Stochastics are overdone. The long-term stochastics, the longer-term ones, and we've got a pullback in the shorter-term stochastics. So, there's not really a heck of a lot to do here. I think where things would really get going to the high side is if we broke this trend line here, this top trend line here. If we broke that decisively, then we could be potentially looking for a retest of these highs around 1800. So I'm not really that interested in the market until that happens. So that's the gold, and that's a long ways off. Let's take a look at the silver. Silver is just putting in a basing pattern. It's a little bit weaker than gold, at least by eye on the chart pattern. Let's look at crude oil. So crude oil, I believe Don was saying that we have potential seasonal strength coming into crude oil soon. So I'll be looking at his work a little bit more closely and understanding the timing factors that could be coming into play in terms of seasonality. But from strictly a chart pattern perspective, you can see the MACD look like it rolled to the high side. It still needs to get over its zero line here, and we held the convergence of these trend lines as we had been talking about going back a number of videos. So it looks like we want to put in a minor higher low, and then we could potentially push higher if we get above this level here around just over $95 a barrel. So the major resistance is still around 100 to 101. So there's not really a heck of a lot to do there either. Let's look at the natural gas. And natural gas we were talking about in the last several videos. Let me just clear some of this stuff off. In the last several videos, it cleared this trend line. It held this low, put in a minor higher low. Once it cleared this, we were more bullish than bearish. But where I was really interested in this market was a break above this swing point here. And you can see once that actually happened, what I was looking for was a break above this swing point here for a retest of some of these levels up in here. And you can see here, once it did actually break through, do you see that wide range bar in it, and the volume picked up, and we pushed through there, and we had like 3 or 4 days of real good upside. We had a lot of almost 30 cents of upside in the natural gas, which in the futures market is like $3,000 a contract. I of course never suggest anybody trade that contract because the futures contract is really leveraged and really crazy. So I would never recommend that at all. In fact, I would not make any recommendations. We're just kind of looking at these charts for from a technical analysis and educational standpoint. So, but you can see here, once we broke above that swing point, we had a wide range bar. We broke through it decisively. We went bullish on my trending indicator right around that point in time. And you can see the MACD rolled above the zero line. And the question is, are we going to, have we hit the resistance here? Have we, is the move over, or could we get a potential test up into some of these highs? At this point in time, I think the major move is done. We may get a pullback either to the breakout point or one of these dynamic support levels that are coming up underneath us, the 8 period or the 21 period, for a potential push higher. So at this point in time, I think the easy move is done, and we'll just really need to see, what's going to unfold here. We're right in the middle here. We could go higher, we could go lower. So at this point in time, like I said, I think the easy move's done, and I don't really have much else on this. So that's all I really have this week. I hope it helps. Good trading. We'll probably have a meetup next Sunday. I'll be scheduling that early this week with the announcing the topic and what's going to transpire at the meetup. So I hope that helps. Good trading, and have a good rest of weekend. Bye for now.